The important thing is, then what? We all know what's going to happen over the next year. Information that everybody has is not helpful because we all have it. Investing is a matter of knowing something other people don't know.
Today is a really, really special day for me. I've been invited by Chairman Howard Marks of Oak Tree Capital to his New York office, and I'm pleased to share this interview today. For today's interview with Chairman Howard Marks, I've invited Mr. J. Young Yang as a co-interviewer, who has long worked in the New York bond market and with whom I have a long-standing relationship. I believe about the bond market, capital markets, and investment markets. We'll have a much more in-depth discussion. First, let me introduce Mr. J. Young Yang, who will be interviewing with me.
Hello everyone at Sampro TV. My name is J. Young Yang. As Mr. Kim mentioned, I worked in US Treasury trading at HSBC for 6 to 7 years. Before that, I worked with subprime mortgages at Shear-Aegis. I've worked on Wall Street for nearly 20 years, and now I'm managing a bond fund in the Middle East. It's great to meet you all.
Thank you. Shall we introduce today's main guest? I'd like to introduce Chairman Howard Marks of Oak Tree Capital. Thank you so much for your time today, Chairman.
It's a pleasure to be with my Korean friends again. My trip to Seoul in November was very positive, and I'm glad to have a second opportunity to speak with you.
Since our valuable interview at our office last November, I want to convey that Korean people have been deeply impressed by your insights and perspective and are very grateful. Now, with Chairman Howard Marks, we'll ask several questions about recent major changes and hear his insights. A few months ago, Chairman, you mentioned sea change, which could be translated in Korean as a complete transformation. Describing such a big change, you said this was the first major change you've witnessed since entering the industry in 1959, after 2 previous changes. Since then, there have been substantial changes. Inflation has come down considerably, and there's talk about the Fed pivoting on rate hikes. Do you still maintain your view about the fundamental sea change that you wrote about in your memo?
Over the last 40 years, we've had virtually all the time until last year either declining interest rates or super low interest rates. 40 years. That means that you and I and Jacob and almost everybody who's watching have rarely seen anything else. And this has shaped people's expectations. They think that's normal. But interest rates went from, I had a loan outstanding from a bank in 1980 at 22%. And then in 2020, I was able to borrow at 2%. Interest rates came down by what we say 2,000 basis points.
Yeah.
The one thing I'm sure of is that's not going to happen again. Because when interest rates are 2, they can't come down much. In this period, the second sea change was the opening of investors' minds to things that, to the taking of risk, as long as the risk appeared to be justified and rewarded.
Yeah.
So a high degree of prudence, a high degree of safety, an insistence on risk avoidance, all of these things disappeared. And now we have a weighing of risk and return. This is the second sea change. The third sea change occurred, it began at the beginning of 2009, when the Fed took the Fed funds rate to 0 in order to stimulate the economy and fight the global financial crisis, and began quantitative easing, buying bonds, which puts liquidity into the economy. This worked very well, and the economy made a recovery. Over the 13 years, from the beginning of 2009 until the end of 21, we had, again, declining or low interest rates, strong economy, no inflation, or insignificant inflation. This encouraged the Fed to continue lower. The slogan was lower for longer. And with the Fed able to keep interest rates low and yet not have inflation, we had a strong economy, easy for companies to make money,
Yeah.
easy for companies to avoid default or bankruptcy, easy for companies to raise financing, even if they lost money, happy investors, eager buyers. Nobody was afraid. And it was just an easy environment to get everything done. And I would just say easier than normal. And so this can't go on forever. This is, what I'm talking about now is the groundwork for the third sea change.
Yeah.